All righty. Happy Monday to you too, Colin. Hope everybody can hear me. If everyone could just confirm, that would be great. Don't want to get knee deep into the call here and find out that no one can hear me. Make sure I'm not on mute here. Nope, we're good. All right. So we'll give everyone here a few minutes to get on, and again, don't be shy. If you can hear me, just let me know. That would be great. Market moving higher as we expected. Well, the Nasdaq is the only thing moving up. And good morning, everybody. Yeah, it's about the truth, Barry. It is. We are pretty drippy over here, sloshy outside for sure. But it's supposed to be close to 60 today, so that's cool. Hey, Tom. Got some snow on the Poconos. Yeah, that's part of the reason we're kind of slushy here. That snow we had was on the ground there for a couple of days, and yesterday, combined with today's temps, are melting it. So, but all right, we've waited long enough. Go ahead and hop into it here, and yeah, let's start with what we were just commenting on. Um, it has felt like the markets are just moving higher, moving higher, moving higher. When the reality is they've been moving lower, moving lower, moving lower. Certainly, we have the NDX here that we look at that has been notching new highs off and on for the past couple of weeks, 2 weeks. But and the S&P had kept up with it, right? But you'll notice last week, the S&P peaked the week before. I believe it was the Friday after Thanksgiving, I think-ish, right? And been kind of on the way to drift lower here since. But even more noticeably, here's your NYSE, right? Having peaked, as you can see, what do we got? About 2 weeks ago, a little over 2 weeks ago. There's your Russell. As far as intraday, I think it's intraday and close right there. That was 3 weeks ago. So a little over 2 weeks, almost three. This has been three. So this reminds me a lot of what was going on in 2021. Not that it has to play out the same, but the Dow was able to notch a new closing high here. But at the end of the day, you'll notice it really didn't move any higher. Okay, it's kind of been stuck now for the same 3 weeks. And look at the last week and a half. Okay, down every day, right? So actually, the markets have been moving lower, not higher. Um, we've been getting carried by a lot of tech. Last week, when I looked at leading sectors, it wasn't tech. Tech was actually in the red last week. It was discretionary and services, which a lot of times we consider those to be tech stocks. but um, but yeah, this is the only thing really moving higher. So everybody else is moving lower, and that explains why we're seeing decliners outpace advancers, and so kind of makes you wonder. We're getting into a period of time where we'd expect more and more bullishness, at least going into the beginning of the year. And so it does kind of make you wonder how much juice we're going to have in us um, if the reality is the market's not moving higher. But that being said, when we look at the Nasdaq here, I wouldn't say it's a great close or anything, but it just looks like more par for the course. So for now, again, as it pertains to the Nasdaq here, as you can see, up, and S&P futures up. So we'll see if we can rally into the end of the month and turn things around here a little bit. I do think I was discussing this morning. Um, when we start talking about the new year, and last week I was mentioning that I have to admit I personally am a little cautious on the first part of next year, whether it be first quarter, first half of the year. Um, with the markets continuing to kind of notch these new highs one way or the other, I think we've lost a little sight of the fact that, remember, you know, easing cycles, once we start cutting rates, that there tends to be a clock ticking on a in a market decline. All right. Same thing with when's the last time anybody was talking about the threes and tens in the inverted yield curve, right? It's been inverted. I believe I read last week or something. It's the longest inversion in history, and a lot of the bobbleheads don't know what that does and does not mean, as far as how it is played out in the market. What typically happens, if and when there is a decline, recession, whatnot, it tends to happen after the re-inversion, which hasn't happened yet, but um, the threes and tens are on the cusp of. So when you look at those bigger picture items that I think have we've lost sight of, and a market that seems awfully stretched, we see momentum kind of starting to wane here a little bit. It does make you wonder, what are we going to be looking at the first quarter of next year? You know, we haven't had a correction, and by that I mean something greater than the 10% in this entire run, right? So we come back, at least as we look at the S&P. Okay, so look at this entire run. We basically hit that 10% mark twice. Okay, this you could say we just barely breached it. But I mean, like, hey, 15, 17, 20, 22%. We haven't had like that real G. It's like we stop right at the 10% mark, and that's all she wrote. Right. And so we've went over 2 years since the S&P bottomed here without a real type of correction or even a mini bear. So you kind of put all these things lined up, and just this bigger picture, if you pan out, I guess I'm a little, cautious, right? A little nervous about maybe what the beginning of the year, that first quarter or first 6 months of the year, what it might look like. Um, so, for what it's worth, that's kind of my view on that bigger picture and what we look at. I don't think it's realistic to think we make it through next another year without a real correction, right? And so by that I mean, you know what, one that feels like the bull market's over type thing. So 15, 20%. Remember when we came out of the 2007, 8, 9 bull, oh, I'm sorry, bear. When we came out of that one, and we had a couple 20 some odd percenters, or at least I think one. All right, so let's go back and take a look here. Let's go way back, hard to believe. Just get us far enough, I think it does. Yeah, so right through here, right? What do we have here? We peaked up somewhere around 12 and some change. Can you believe that? 1200. Yeah. And we hit a low in the area. Right. So this was I think this was short of 20%, but it was close. Right. This one, if I remember, it was 23%. Okay, and we did that within the first 2 years. Two corrections, well south of or north, you could say, of 10%. And then by the time we got another one, right, that was way over here. This one I think was 16 or 17%, something. And then we got this 20 percenter. Right. So from that bottom, I mean, so granted, this is a long time. There's the COVID, and then the gem. You'll notice that started right at 2022's, the start of 2022. And in the grand scheme of things, it's just a little mini bear within a bigger bull, right? Didn't really end any type thing. And then now here we are, seemingly due. And look how we're kind of almost kind of coiling up in a, you could say a, rising bear wedge type of fashion. I don't really have anything like that marked, but you can kind of get the idea, right? It's tightening coil. So, are we calling some sort of a meaningful peak in the first quarter of next year? No, no. I think I haven't seen anything that I need to see from the technical standpoint that we look at. Right, I like larger momentum divergences, and we're not really seeing those. So, so I haven't seen anything like that. That's the only time I've ever made calls like that is when I see meaningful divergences. Those have been the most reliable things for me, and then preferably some sort of price that goes with it. So if you go back, to the bear market it was relatively easy to call using those metrics. It wasn't too terribly challenging here. We had a monthly momentum divergence took place as we went to this peak, and price confirmed that if that's going to play out when we broke out of the bottom of this channel, right? And the monthly divergence, it's right here. It's just you can't see it because it's on the daily, because we're currently on the daily. But if you pan out, you'll see it. Right. So see right here. That's the way we were able to call that correction. That's how we're able to call this correction. It's how we were able to call. I know none of you were probably around back here, but it's how we were able to call this one. Now the extent of the correction is obviously much harder to say. Okay, but what we know is, and if you go back to 2000, which you can't see here, the market is now 5-0 since the turn of the century. When you see one of these momentum divergences pop up, get ready. Something's coming. Now, it might only be whatever this was, 17%, right? It might be 20%, like this one. It might be 30%, like that one. These previous two, they were 50 percenters. But what we know is pretty reliable, right? Which is what we'd expect. This is large scale. Takes a lot of data over a long period of time to put this thing in. So not only will it tend to be more reliable, right? We don't see them very often. When they form, they will tend to be more reliable, and then obviously there's bigger implication. So as you can see, there's nothing like that yet that we would see when we look at it from time to time. But and imagine what would have to happen though. A lot of time will have to pass. We would have to fall first, run back up to new highs, and then have that next peak not so that would we would need something going into next quarter, next half year to put in a monthly divergence. Do keep in mind we don't need a monthly type of divergence to drop. So just to be clear on that front, there was no this is the Nasdaq, right? But there was no divergence here. Didn't stop it from falling, right? So so we shall see. We'll see if we get something like that. But as of right now, there's nothing like that that is popping up. So, that's my view going into the year. Ultimately, what we do is we kind of trade. We're shorter term, so that's why we don't really talk about that bigger picture as much because we're not super, concerned with that big picture. When we know we're in the bull, or if we know we're in, certainly we want to have some sort of larger scale. What do we think the overall move is for sure? But whether or not we're, um, in a long term bull, long term bear doesn't have near as much effect on our trading as much as just trying to get that, you know, shorter term. Hey, what are we doing this week? Type of thing. What are we doing going into next week? But yeah, in fairness, sure. We look at that within context of what the bigger move is for sure. So all right, so that's kind of the market. Any questions on any of that there? How many people on this call think that we make it past the first 6 months of next year without a correction? By that I mean a technical 10 to 20% or more. How many think we make it through that first 6 months? Keeping in mind that means we will have went nearly 3 years without that correction. Oh, Tom does. Okay. Yeah. I don't know there's any case to be made for it. I think we've just made a great case for their not not making it through, but I guess I would love to know what you think the case is for it. And before you say anything, things that are different than what's going on now. Of course, going on right now. But we're talking about forecasting forward. And definitely if there's a case for it, like what would be the case? And I don't really care about fundamentals are dumb, right? I don't that does that's not a case, right? So don't give me fundamentals. Remember, beginning of 2022, based on the fundamentals, the top 10 investment banks on this planet called for the market to move higher in 2022. Okay. So fundamentals aren't a reason for what is going to happen. Remember, markets are going to move higher, and fundamentals are always good at the peak. I kind of like Royce's answer, Collins, but the question was, how many of you think it? So none of us are here trying to call it for fact, right? Stefan, how you doing, man? I don't see you around as much as we used to. It's good to see you. That's true, Barry. But remember, I don't know that the market cares. Okay, people. It's unfortunate that people think presidents matter as much as they do because they really don't matter at all. I'm talking about for trend. We all remember the Trump tweets. I'm not saying stuff like that. I'm talking about overall trends. I don't know that there's any real case to be made that the market cares all that much. But yeah, I mean, I haven't seen anything that leads me to believe there's a great bull case, other than the fact that hey, it's what we're currently doing, right? But so we're always doing that until we correct. And that's another thing too. I mean, when you look at historic average, you get a correction about once every 1.5 years. So we're approaching 2.5 years. So I think that tariffs seem to matter. They do and don't, Alan. You know, I'll give you a 50-50 on that. Remember, there were tariffs the first time around, right? And the market rallied. Well, I guess depends what people are going to blame. The COVID crash is a tough one, but remember, first time Trump was in office, he was slapping tariffs all over the countryside. Didn't stop the market's trend though, and it didn't ever induce a correction, right? So remember, we're not talking about just like a 1 day 2% drop or something. I'm talking about a correction, and no Trump tweet, no tariff ever caused one. And this time, we even kind of know it. We're much more prepared. So I would say that's less of a concern than it was the first time around. And I always encourage everybody to remember this: when corrections hit, if it was, I would say as a general statement, from a fundamental news type standpoint, no one ever sees it coming. No one ever sees it coming when it happens. Now we could do the Michael Burry, right, where we know it's coming eventually. But what? It wasn't he like 2 years ahead? Wasn't he shorting things like 2 years before, or something? So he eventually got it right. But like when it happens, it's like, oh shit, we're down 12% already. But I could see the reason why I'm saying I could see to Alan's point. Certainly, we could see we start getting in a trade war of some kind. I don't know that the market would be too terribly thrilled about that, but yeah. So don't get me wrong. I'm not saying these things quote don't matter, but when you're talking about trends, I think the market's already proven that they don't. And this time we know it going in. So I don't know that I would say that would be a reason to think about a correction. I think my opinion is markets just simply correct when they do. And usually there isn't a reason. Now we slap the reason on it after the fact, or at least I'm sorry, let me rephrase that. The reason isn't apparent at the time we start to correct. So take for example 2007, 8, 9 bear market. So great example. Now we all look back and we say it's this reason, that reason, or that. But remember, at that time, the investment banks were kind of lying to us. According to the Fed, he didn't see us, Bernanke didn't see us going into recession, even though we now know that we were already in one when he said it, right? So, which is incredible, by the way. But neither here nor there. I would just say that I think odds are, I think if you look at everything and remember what's happening in reality and the market are two different things. Okay, so what the market's doing now typically has nothing to do with what's going out in the real world now, right? Markets are forward looking, right? So when the markets decide they're going to take a crap, it's going to be on stuff that's maybe being looked at in the future. But I think when we look at history again, when you look at, I think market's been pretty good. Once you see easing cycles, you're on the clock. And we started. When was the first rate cut? Was that last FOMC or two FOMCs ago? Regardless, what we're at least a month or two, 3 months into it. 30s and 10s are getting ready to reinvert. That typically triggers signals of recession. Markets are ahead of it. September, Kevin, thank you. So yeah, a couple months back. So market's been pretty good about it. Pretty good about it. So I think that's a great case. Doesn't mean it will happen, obviously. GW, I don't know what that would have to do with anything. I mean, if they have success, I would think that increases the odds, right? Remember, cuts, 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 and more cuts and cuts and cuts. That's jobs. That's the economy. If they don't accomplish anything, then it's par for the course. And why would it change anything? But I would say just always remember markets, they don't ring a bell at tops, but we will find out. But I would say, I'd be willing to take wagers. I guess I'll put it that way. I'd be willing to place just fun bets that we do get a correction in the first 6 months of next year. So, but we'll see. Markets do what they do, right? All right, let's look at some stuff and some things. Tesla's never going down again, so that's good. Great close by Tesla last week. Although, if you notice, each one of its great closes have not been followed by necessarily great next days. But apparently, this one's never going down forever. So I don't think I'd be chasing it up here. I think I just kind of just sit and wait, see if you can get a better spot. Obviously, as many of you know, we kind of play both sides, so there's always that. But we looked at that last week, and the premiums are just pricey. So, but up a few more dollars in the pre-market, nothing special. Nasdaq is up in the pre-market, markets are up in the pre, futures are up there. So we like that. We obviously put a trade on in Lulu. I kind of like the turnaround here. I really wasn't thinking that this was going to be a level that really came into play, but it's one that has mattered in the past. And sure enough, I guess it matters still, right around 385 ish. So I kind of like Lulu, at least for now, to kind of resume. Obviously, a lot of talk about Broadcom. So I don't know how you play something like that. I don't know that anybody can sit there and say that thing's going higher or lower. I think, of course, you have to err on the side of higher, market moving higher, at least as it pertains to NASDAQ, tech, that type of thing. So I think you're definitely erring on higher. But we had talked about possibly, I don't even, I think I want to say we even looked at the premiums on this for like a 210, 230 strangle for it to break one way or the other. Yeah. Look at that. Oh, no, look at the wrong one. There we go. Say, wow. Yeah, we looked at, no, wait a minute. No, we were talking about this. So this call side is going to be much more expensive. So I don't think I would do that. I might go here instead. I mean, I kind of like that for a trade to start the day. Wait a little bit after the market opens, but something like the 240, 210. So basically, what you're doing here, if you're throwing a stop underneath this low, that's what you're doing. And then you're saying, hey, I'm going long for an upside move. So I might actually be willing to pay extra for the 230 to be weighted to the upside. But then you've got your stop here in case you take out that low. So I kind of like looking definitely the 210 on the put side. Up here, I'd have to see. I wouldn't mind waiting out the open to see if we can get a little dip, a little pullback, a little something, get a little premium for the weekend sucked out of there, and see if we wouldn't mind getting something 235, 230. But if you look at the monies here right now, you're currently around $6. Right, so you want to keep that in mind. You're going to spend $1 over here, and then I would love to. I mean, I don't hate the 240s, but again, tough call. So we want to keep that on the watch list. NDB looks terrible, so we put that trade on as well. More of a hedge to our long play on Lulu, but it looked like we were trying to pump the brakes here on Thursday and Friday instead. So I'm kind of watching. I don't know if this 240 is 240. I mean, we had this, but we also had earnings around here. Prior to this, you can see this 240 was a meaningful level, both support and resistance underneath. So I was kind of thinking we want to get here, but 260, you can see a lot of stuff going on in there. 250 is a number right there in the middle. So, but it's kind of flat in the pre-market. There's nothing going on. What else are we looking at? App was moving last week. Kind of picked up the steam, picked up the pace a little bit again. Although didn't do a whole lot, or didn't do as much as we needed on the Thursday and Friday. Still holding this low. We thought this was a meaningful low being put in, so it's still holding that. But I guess I'm a little surprised it didn't follow through at all. So might not hold up after all. Um, who else were we eyeballing last week? AMD looks a little sketchy to me. Kind of see there's a pretty good trend line that had gotten broken. So that looks, speaking of looking a little sketchy, NVIDIA's potential head and shoulders here. Shoulder, head, shoulder. So I'll be watching this zone. NVIDIA takes that out. I'd be thinking probably here. Take that out, and you could find yourself in some more trouble. Okay. What stock was that in on audio only? Shoot. You remember the prices I referenced? Now you're in prime time, Eric. So we already have two of them were Lulu and MDB. So we've already got those. And then I was talking. If you're talking about the one I was talking about strangling, it was Broadcom, AVGO. The low was basically in the 210 area, just above 210. So I know I'd want a put side to be under that. Now it's jumping $7 right here at the open. So that might change things. I was kind of hoping maybe we get a pullback first to get a little less expensive call side play. But again, the 230s are out of the question, which is what we were looking at. So now you're definitely looking at least 240s. 240s are going to run you at least $3.50. and probably not interested in the 210s now. I'd be looking maybe more like 215s. So that total puts you in the $4 range. But I'm also okay just ignoring it. Yeah, that was it. That was Broadcom. But now it's kind of, it also depends too, like, how much of an exchange for higher probability are you willing to give for lower profit, right? If you really want to get tight on this thing, 240, 230 is going to cost you $8. So as long as you clear 248 or you drop below 222, you're making money. But there's a higher probability of that happening than say getting to 280 or something. In the close, this thing goes down at 225. So the dynamics of it are changing here now, up $10. So I don't mind. I personally don't mind waiting this thing out. If I was going to get in now, I might go 245, 225 for $5, and then see where it takes us. Remember, we got FOMC this week, so should get a little bit of good times there. But, all right, market's open for business. I know people want to get out there and do some trading, so I will let you run. There will be a Marketcast call next week. It's the only call I'll be doing next week, but there won't be one the following week. So just an FYI on that front. So I think that's the 30th, I believe. So we will be here next week. All right. Otherwise, everybody, good luck in the trading. Have a good one.